Alright, going short here inside of the bearish order block. 2 consecutive up close candles. As soon as we cross that opening price, that's where my short is. Stop loss above consequent encroachment of this wick. I'm going to take a partial here inside of this discount fair value gap. So if you take your fib from this low all the way up to this high, first discount array, we have sell side, liquidity. Let me do it like this. We have sell side underneath this low. We have an obvious fair value gap here. I'll take off bulk majority of my position if we can manage to trade into that. And then I'll be holding out for initial sell side, which is your lowest low between 6 p.m. and 7 p.m. here. All right. So we're going to go ahead and draw that out. This is live funds, by the way, personal account. And I'm thinking I'm going to take off 5 contracts if we manage to trade into this inefficiency. Take off 5. Take off 1 underneath the sell side, and then maybe leave a contract on for like this sell side down here or this fair value gap in case NASDAQ wants to get real animated. But for now, I want us to see us get below this low, but more specifically this low here, because then I'll treat these down close candle here as a breaker. So we have a high, low, higher high, down close candles in between 2 highs. I want us to get below that, treat it as a breaker. It's probably cleaner on a 2-minute chart. A little cleaner right there. And then I'm also expecting your market maker sell model to pan out here. Smart money reversal, low risk sell, looking for that first stage distribution, and then second stage distribution, and then sell side return back to the original consolidation. So that's what I'm expecting to pan out here. Do this. Notice where this candle opened at the opening price of the bearish order block, 2 up close candles. We drop down, close here, open, drop down again. I want to see us get a lot of speed underneath the swing low and then use the breaker as resistance. Part of me wants to do like a full pull and just aim for the sell side and just manage my stop on the way, but I'll grow eventually and feel comfortable doing that, but I like paying myself along the way, so I'm going to take off 4 contracts inside of that fair value gap. I also want us to get below that new day opening gap, our current new day opening gap. I want to see us get below it, treat it as resistance, and then sell off. And once we take out this swing low, or rather if we can manage to take out this low, then I'll move my stop to break even. But right now my stop stays where it's at. No fear of getting stopped out. I'm never in a rush to move my stop. It's there for a reason, to prohibit any unnecessary losses. Never in a rush to move my stop, because the last thing you want is to get stopped out prematurely because you were scared of price reversing on you or doing whatever. And I already know my broker is going to do some funny business once I take partials, so I'm going to change this. And we're going to do this. We're going to do limit orders for our stop loss and take profits. And whenever you're trading Asia, always account for the spread to make sure you get that fill. So if you look up here in the top left, you see how it says 0.5. Okay, that's the spread. So right now the spread is 2 ticks. Sometimes it'll bump up. It'll say 0.75. That means the spread is 3 ticks. So if you're aiming for this fair value gap, you want to come off that high, the fair value gap, by 2 ticks. So that way the spread can get you in. So the high, this fair value gap is 84 even. So my first take profit will be Did I say that right? No. The high of this fair value gap is 80.75. So you want to come off of that by about 2 ticks. About right there. I'm going to take off 4. So this is your first stage distribution, this fair value gap. I want to see a sell off here. And then I'll take off, that's 4. 4. Yeah, that's fine. Sell side, we'll do 2 contracts. I think I'm going to split this up actually. I'm real picky when it comes to picking my targets. I'm trying to be as precise as I can, so. But first partial comes off at the high of the fair value gap. Second partial would be at consequent encroachment. Third partial at the low of the fair value gap. Down close candle, it's a bullish order block. I'll take a partial there. Right above that opening price. This candle right here. So what is that? 2, 3, 4, 5, 6. That leaves 1 contract on. And I like this fair value gap here with sell side resting inside of it. So that would be like best case scenario. There. There we go. Looks good. Working this fair value gap some more. I like how the bodies aren't closing anywhere near the fair value gap. This candle open, traded up, failed to reach consequent encroachment. And then again, I'm not moving my stop until we get underneath this swing low here. I'm watching this wick. Wicks are gaps. So I'm seeing this as a normal fair value gap. So in essence, it looks something like this. And I would like to see that take us lower because we have 2 converging factors here. The wick and the actual fair value gap trading up into it here. And then I like to see a lot of speed because what do we do here? We left relative equal lows. This low and this low. These equal lows here. Too smooth, too clean. So once we run that out, it'll be a risk-free trade. I want to see a lot of speed underneath these lows. Clean sell side, way too smooth. I don't want to see us take out that low and then retrace and play around. I want to see us completely blast through it like a hot knife through butter. So again, I'm seeing this hole from this high to this low and this retracement back inside this fair value gap. I'm seeing that as the first stage distribution in the market maker sell model. So let's go ahead and outline that. Try to make it look pretty for you guys. I saw, or I didn't see, but somebody messaged me in Discord. Some guy claiming he came up with the Asia ATM model, which I thought was pretty funny. The real ones know where it originated from. And just a reminder, I didn't come up with the Asia model. Okay, that's from Lecture 5 of the 2024 ICT Mentorship. I just put a video together that I feel like explains it just a little bit easier, a little bit more concise, more step-by-step. So it's not my model. It's not something I came up with. I did come up with the name, the ATM model, because it's literally like an ATM machine. The stuff repeats, and it's almost like free money. So I just thought that was kind of funny how it's getting out there and people are kind of taking it and running with it, but it's okay. As long as it makes them money and other people are making money with it, that's what it's for. It's not like I came up with it. But the guy who was teaching it, I didn't see him pressing too many buttons in the live market, but we're not going to get distracted. We're not going to get distracted here. Again, stop loss is staying where it's at until we get that right there. Perfect. Hello. Check that out. Look at that delivery. And that right there is why you had to account for the spread. So I only got filled one contract. Adjust my stop. So if you had a limit order sitting right at the height of the fair value gap, you would still not have gotten that fill. So that's a perfect example as why you have to account for the spread. So if price were to reverse here, from that simple tap right there, you'll be feeling some type of way. So you have to account for the spread. You have to. But I still have like 90% of my position on. Only got out one contract. So it's going to be a profitable session for me, but I still want to get more of those limit orders filled. If we do tap that new day opening gap, I want to see, again, I want to see that after, I can't even speak. I'm tired and there's a bunch of noise outside my apartment. But I want to see the low of that new day opening gap, offer resistance. And then remember, we have the breaker here. And then these two up close candles, that's one bearish order block. So that's three factors which my stop loss is placed above. I like to see that send price lower. Or if I get stopped at break even, it's no big deal because I took a partial. All right, hitting the low of the new day opening gap perfectly there. Small little fair value gap there that we just traded up into. Right here. Now, best case scenario, ideally, this is where I would like to see price rotate lower. We have a small little inefficiency here, but okay, this is my thought process right here. This fair value gap is resting where? It's resting in the upper half of our current new day opening gap. If I'm bearish, I want to see the lower half of the new day opening gap be used as resistance and take us lower. So this fair value gap, we open, trade up, hit it there, bang, consequent encroachment. I want to see this higher one here stay open. So this fair value gap up here, I don't want to see this traded too because it's in the upper half of the new day opening gap. Okay, for bearishness, optimal bearishness, ideally, best case scenario, this is the fair value gap that you want to see send price lower because it's in the lower half of our current new day opening gap. And then I'm also seeing this as your second stage redistribution. So boom, come back up, fair value gap, wick, that's your first stage, sell off, come back up, fair value gap, treating that as the second stage redistribution. And again, I'm expecting another drop down, another sell off, preferably really aggressive, really fast, because my main focus is the sell side down here. But again, partial has already been booked. So worst case scenario, I don't get the rest of my limit orders filled, and it's still a profitable trade. That's why I got to take partials and account for that spread, especially during Asia. Right, there's your bearish order block. That's kind of like the last line of defense for higher prices for me. Anything above that up close candle, I'm not really interested in. It's also a volume imbalance. So remember these two up close candles here. That's my last line of defense. I don't want to see anything higher than that. If that's the case, then I'll just get stopped in profit. Alright, and there we go, stopped in profit. So this is actually a good example of why you have to account for spreads in Asia. This was a good learning experience.